Let me record this session so we can share. You don't have to go over it multiple times.
Okay.
All right, recording have started.
Okay. Yeah. Good afternoon, everybody. Good morning. Okay. Okay. Looking on my screen, I'm sure we can all see my screen. This is a strategy I picked up from the Ishimoku Plus Plus. It's one of the indicators, and it's called the parabolic indicator. From this chart, this is the parabolic signal. The parabolic signal is one of those signals that help you to determine when the market is going up and when it's pulling back. It's very, very easy to use and it's very simple to use. Once you look at it, you will know the trend of the market. This is the parabolic signal from the Shimoku Plus Plus that we talked about the last time. From here, let me go to, I'm still coming back to this chart, the way to tell us how we can merge the indicators with our Ishimoku. You know, we are still trying to do some back testing on this new strategy. So this is the parabolic indicator. And from my screen, this is when you search, you get these parabolic indicators, or you come to FX, search SAR. That is it. Parabolic SAR. That is what it's called. So once you click it, this is what comes to your screen. Now, I can only see ups and down in this strategy, a star up, a star down. So how do I determine the market? Is it that when this star is up, does it mean I should buy, or does it mean I should sell? Or when this star is down, this indicator is down, when I mean the star, I mean this. Is it when I should sell? Now, this indicator is more than that. It's an indicator that tells us, okay, when now this trade is pulling back. So if you are this kind of traders that you're only trading for now, you're not trading for a future, maybe for a longer time, you can take away your trade and look for another better entry. It gives you a better entry, a stop loss. We can use this strategy for so many things. We can use it for stop loss trailing. We can use it to determine the trend of the market. We can use it to take our profit, to even know and understand the trend of the market. Now, but with this plain SAR, it is very, very hard, because in this SAR, sometimes it calls in a false signals that maybe is trying to do a short pullback. So, and if you think, oh, this pullback maybe has given me another trade, it's going to be a problem. So now, that is where the help of my EMA comes in. So what do I understand by EMA? I know most of us must have come across something called a death cross or a golden cross. Now, the help of this EMA is to determine when the trade is going for a death cross or a golden cross. So now, I just mentioned two things. What do I mean by death cross or a golden cross? A death cross is when the trend of the market is pulling back or is going down. It's like a downtrend. It's not like it is a downtrend. And a golden cross is an uptrend. Now, you're looking for a good trade. The best way to determine a trade and to make more profits is when you enter into a trade at the cross. when the train crosses, it is far better for you to pick it up from the start. You can also pick the way, or maybe the way the trade is going down, or maybe if it's a golden cross, the way it's going up, you know, oh, okay, oh, this thing is an uptrend. But it is far better for you to pick it at the edge, the starts. And how do you determine that? That is where the EMA cross comes in, which is the 50 and the 200. Now, when you, it's a default setting. There's no setting for the EMA cross, which is the golden cross and the death cross. And once you put how you're going to find the EMA to EMA cross, you come to FX and you put in EMA cross. Sorry, EMA cross. This is it, EMA cross. So it brings this to you, to your screen. This is how you have it. Now, the only thing you can see on this MA cross, or the three things you can see on this MA cross, is two lines and a plus sign. What is the help of this plus sign? The blue line is an indicator, or I'll call it the cross 200, which will tell you, okay, this is my cross. Once my junior brother crosses down to me, that means it's going down. And when is above me, that means it's going up. So that is the help of these two lines. This red line, I call it the junior brother. And this blue line, I personally call it my senior brother. So this blue line makes, it accommodates things. It accommodates so many things. It can, even when the market is pulling back, it can still accommodate, rather than the junior brother. When the market is pulling back, it doesn't have the stronger strength to hold on to the trade, or to hold on to the pullbacks. Now, let's look at the crossing. This here is what I call a dead cross. Why do I call it a dead cross? Because the red line just crossed down the blue line. That is a dead cross. Now, let me show you what a golden cross is. This is what I call a golden cross. Here is a golden cross. Can you see why people call it golden? Definitely it's an uptrend. When it crosses, just know that the trade is moving up. And sometimes when the news is affecting the market, it might cross and comes back immediately, maybe after some few candles, like what we have here. Now the cross came in here, but maybe from this look of things, this is a new candle. So the new candle took it back up to continue the uptrend, which has been coming from here. So definitely, now this is a golden cross. Let me now blend or put in the both strategy into use to know how good this EMA and this SAR, like the parabolic SAR, comes into good use. Like I
Sorry,
said
before
earlier,
before you go on to the adding the two. So do you mean golden cross is when the red cross is up and the
yes,
dead cross is when the red cross is down?
down,
Okay,
yes,
okay.
yes. So the golden cross is when it crosses above the blue line. The blue line is 200, while the red line is 50. So when it crosses above the blue line, that is an uptrend. And when it crosses below the blue line, that is a downtrend, which is a dead cross. But above the blue line is called the golden cross.
Okay, thank you.
Or do I need to type it on the screen?
Yes, that might be helpful for visual people like me. Thank you.
Yeah. Boom. Yeah. I think this is better. Yeah. So let's bring in the SAR. I think that EMA cross, the golden cross and the death cross is very clear now. So let's go back. Let's bring the. Okay. Thank you for that. Mhm. So let's bring the SAR to know when some fuzzy signal is being called. To know when some fuzzy signal is being called by the SAR. So, sometimes the SAR will call a trade, maybe the trade is pulling back, but you will, oh, okay, maybe the trade is crossing. That is the help of the EMA cross. So now let's bring in the SAR. So now it looks like something much on the screen, but it's very easy. Now, let's say the use of this SAR. Please, I need to go back to the SAR again. There's something I omitted. Now, the SAR, we need to understand something. This first, the first trend for you to trade the SAR is either on uptrend or downtrend. You need to let the first call. I need to make this my star little more thicker so we can all see that. Yes. So now this plus sign, we need to make you need to first allow the first call candle closes, then your next candle, which is the second candle, is when you are going to enter into the trade. The reason why that is because it might be a first call, and when maybe the trade was on a downtrend, and you just jumped into it because you didn't wait for the second full signal. Maybe you didn't allow the candle to close, and you jump into the trade. The SAR might be a false call because the SAR reads market ahead. So it might be a false call that, okay, this market is not going downtrend, it's still going the uptrend. So if you join the trend thinking you joined earlier, thinking you want to make money from the start, it might take you to a bigger loss before you start making profits or before the trades pull back to your favor. So you need to first allow the first candle to finish whatever, to close before you join the trade. So now let's bring the EMA cross into use. This is our currency pair. You know it's a very slow moving market, but no matter how slow it is always a market that determines that I am moving into the burst and right direction. It cleared the coast for you that this is where, okay, now I'm pulling back. This is where my trend is. definitely, even if you're not entering at a specific point, when you move ahead, you're still going to meet the maybe if it's an uptrend, maybe you didn't join from the start, and the way the market is still going. Oh, okay, still moving my trend. Okay, the way it is not coming down anytime soon. Maybe your most of the trading hour for this, I will advise us to start our trade maybe from the you can there's something called a model trade and there's something called a model trade and the trading chart. Now, what is model trade? Model trade is when you trade, you check your trade on the higher time frame because there is less noise on the trade or the currency pair you are looking at that point in time. That is what the model trade is. So, but when you want to trade, when you really want to go into the trade, maybe you're trading on a daily and which is the model trade. You can do monthly, you can do you can do monthly, you can do weekly. But let's say for a daily chart, you are looking at the daily chart and you want to analyze your trade on the daily chart to know the trend of the market. And once you want to enter into the trade, you can come to the next avenue, which is the 4 hour, for you to go into the trade. Because the reason why that happens with this strategy is there is less noise in those trades compared to when you're trading on 5, 10, 15, 45, 1 hour. So if you want to trade on 1 hour, you need to use 4 hour as your model charts. When you want to trade on 15 minutes, you need to use 30 minutes on your as your model charts. So to know okay the trend of the market. So if you are trading on 5 minutes, you need to use 10 minutes as your model chart. So now bringing the SAR together now. Now this is where this is where the cross came in. Now
I don't think we're hearing you. I can't. Is anyone hearing him? Can you type in the chat if you're hearing him? Yeah. Okay. He's gonna come back in. Okay, thank you. Thank you. Let me pause.
from we understand the EMA, the MA cross, and how to implement the SAR to bring it onto our live chart. So now, when you want to enter into a trade, here, this is when the cross came in. That okay, if you check from our previous movement, the down cross, the death cross happened, but I think the news brought it back up because from this look of the candle and this candle, it's a news candle. It's not a normal candle. And then the call came in. The pullback happened, and the call came in for a stronger buy. Now, this big plus is a signal for us that the cross just happened, and definitely you can see yourself. Let's say, for instance, that we are not seeing, we can't see what happens from, let's say here. Let's say we can't see all that happened. Oh, I'm looking for a way. Doesn't work. Let's say we can't see what happened from there. That the call came in here. So what do? We wait. Now, why are we waiting? We are waiting for a clearer version that, okay, it's not like the movement is an immediate, maybe like a force movement that is coming back down immediately. So you wait while the lasts for the for the smaller cross below the candle. Now, if you want to enter into the trade, now this is my white line, this my vertical line is a line that this is where I'm entering the trade from. And this is my entry. Now, I need to allow this candle to close before I join the trade. My reason is it's another false call can comes in, and if I join the trade now, maybe the trade now calls for a pullback. Just imagine I join this trade here. Let us imagine I joined this trade here because, it's still going up. Maybe the last time I saw it, this was the trade I joined. Now the pullback comes in, and now this is where, so when other people are enjoying the profits, I'm fighting for my life to come back to positive, to come for my trade to come back to blue. I'm actually fighting for my life. And now, after I joined the trade, when the trade, after this is 4 hours, 8, after 16 hours of fighting for my survivor, that is when finally this candle brings me to blue, which is another call for a buy. Where other people are buying to make money, then I'm now fighting for my survivor. So we don't want that to happen. So that is why we allow the candle to close. So when the candle closed, now I'm checking the chart on 4 hours. Now let's say I entered my trade here.
Sorry, before you go so far,
Okay.
where you had the circle with that
Okay.
plus line, right?
Yeah. Yeah.
Why will I wait until the vertical line to enter the trade? What am I looking for?
I'm waiting for this call, this small line, the small plus. For
Okay.
me, I say for me, I
Okay.
need to be very sure that the trade I'm joining is a good trade for me, because if we pull back to our time, we can definitely see that maybe in some other trade, some other hours, the trade pull back calls for a plus and comes in maybe after like 2 hours. If we check for if we look at a shorter time frame here, this is a lot of noise that
Correct.
happened here. This is a lot of noise. Maybe is trying to fight, looking for, trying to pick a side, trying to fight, look for a direction. Maybe am I going back down or am I still going up? There's a lot of noise if we go down on the shorter time frame, which I know we know that. So I need to have a clearer way that this trade is actually, I don't want noise. I just want to go into the market gently, make my profit gently, and move out of the market and wait for another better entry opportunity. I don't want noise. I don't want so much activity that will be like shaking. He's moving back against me. The only way you can enter into the trade that is going to give you a big profit is when you enter from this big candle. Now, did you see on this big candle what happened? A false call came in for a sell. Did you see that? Can we all see that?
Yes, I see
There's
them.
instead of the small cross, the SAR indicator to tell us that I'm going on an uptrend. Instead, this is coming on a downtrend. So now, immediately this cross comes in and you join the trade. Definitely, you've lost a lot of money here on just this single candle that's moving on in 4 hours. So, and after that, a lot of noise happened before the trade decides to move into your direction. So that is why I need to wait and allow my plus, my SAR indicator plus, to pinpoint my better entry for me, which is when this small plus comes in, it might be on the line or a little below the line. Why I picked this vertical as my entry is because it's above my 200. And what does my 200 do is like a big brother that can shoulder my problem, which I know that, okay, after this big call, this means from here, there's a big noise here, and this big candle comes in. Definitely is an uptrend candle. So I joined here. Let's say I joined this trade here. Let me go back to, okay, maybe the big brother accepted the fact that, yeah, the trade is moving uptrend. Let's join. Let's join the trade. Let's get in. Let's make some money. But for the small brother is still like, I'm still scared though. I need to be sure. Let's join the small brother to ride on the trade. Now, this candle needs to close first and wait and join immediately or during the movement of the second candle. It might be immediately the closes. Maybe you're busy doing something and you're trying to watch the time, and maybe you skip some few minutes. You're still in. You don't need to be worried. You don't need to be scared about anything because you're trading on a longer time frame, which is the 4 hours. So you have four. You have good. Let me see. Definitely, you have 16 hours trade movement to yourself. So, and definitely with the look of things, you made a lot of profit. So no matter how you want to make your trade or how you want to, in 16 hours, definitely you're going to have the time between those hours to check your trade, no matter how bad it is. Or maybe if you're this type of person that, okay, I think I'm okay with 50 pips, or I'm okay with, let me say 70 pips. Now, this trade has just given you that opportunity to make that 70 pips out of this market. See, 75 pips in 20 hours. Before you even check, maybe okay, I'm back. Okay, let me check my trades. Boom, you're out of the trade already because you just wanted 50 pips and you're out of the market. Now, talking about that is the work of the entry. That is the entry from the SAR. Now, this SAR here, we can see another call that happens here. Now, on the call that happens, personally, I would think that this is a sell. Maybe the trade or the movement has just called is a sell signal that just happened now. Definitely, I want to, well, I'm very happy. This trade has just come into a called another sell. Whereas it's called a false signal because the reason why it's called a false signal is the EMA cross has shown us or make us know that it is an uptrend market. So whatever happens above the candle, whatever calls happens above the candle on an uptrend is a pullback. But whatever candle happens below the candle on the downtrend is a pullback. Do we get that part? Do we get that part? Whatever happens or above what, let me explain that. I think we didn't get it. So now, okay. Let me repeat that part. Now, I enter into my trade here. I maybe if you're this type of person like me that have time to check the chart, often maybe in hours, maybe like every 2 hours, I check my trade to know, okay, what's the next call coming in, and boom, this call comes in. I know definitely is a false call because it's like it's telling us that the market is pulling back. Now the market pull back for the market pull back for over 12 hours. So definitely, if the market pull back 12 hours and you're already at 75 pips, now when the market pull back from your entry, maybe you didn't see the call coming in, then definitely you've lost over 40 pips to the trade. instead of it to check out, you've lost over 40 pips. So which means it's a pullback when that is when the trade pulls back. So now on this trend, you don't buy, you don't sell because it's a pullback. You don't sell on the pullback. And the reason why you don't sell is because that is the help of the EMA cross, the EMA 50 and the 200. It's telling you that this, you don't buy, let me make it simple, you don't buy above when the star appears above the candle, it's a pullback on an uptrend. But when the mark when the candle is below the candle, it's a buy. Above,
You mean when the star?
yes, when the star, thank you for that, the buy call above the EMA cross. I think that's it. The write-up is clear, right?
It's clear. Now, if I understand it,
Okay.
on this red, this from here right now, this is the EMA crossing,
Yes.
telling us we are crossing up to uptrend
Yes.
with this red. This is like the golden cross, correct?
Yes.
All right. As long as we have the golden cross, we do not sell.
Yes.
Okay. So that tells us in a golden cross, if we have indication from the SAR that says
Yeah.
to sell, we ignore it. We
Yes, because
see it
it's
as a pullback.
yes,
Okay.
definitely.
Okay.
Yes.
Gotcha.
Yeah. It's a pullback. So I think the buy it's clear now, right?
Yes.
Okay. So let's check. Are we clear with the other thing too also? I think I take that for a yes because silence means consent.
Yeah, I mean, so far so good for me. Please ask questions, guys.
Yeah. Let's ask questions before we move to the downtrend. Should in case. Okay, so let's look at it. Same thing applies to the downtrend, but on this part of the downtrend, when this star is below, for the downtrend now, when the star is below the candle, it's a false call. It is a false call because it's trying to let you know that it's a pullback downtrend. Appears below downtrend. Pullback. And when the star appears above the candle, it's a cell. It's a cell called above the EM, below the EM now. Now, here for the downtrend. This is how it looks like. Now let's go to where the death cross comes in. For the downtrend, it's called a death cross. Now the death cross happened here. The death cross movement happened here. Boom. Here, immediately if you see the death cross and you join this candle, it's a lot of noise. I don't want to trade noise. I don't want to trade noise. I want a good trade for myself. I want a good trade. That is why I'm into the trade. Firstly, there will always be a fight back. Maybe if it's on the death trend, death cross, any cross that happens, there will always want to be a fight back. The fight back is either it's the crosses happens downward. The uptrend people will want to take the trade back up. But if it's on the uptrend, the downtrend people always want to do the noise, the dragging before they finally releases the movement. So I don't want to trade into noise. That's why I always wait for the noise to go by before I enter the trade. So now, when I see a very clear movement, okay, this is the trend that happens. Now again, another movement happened where the first call happened where the people want to take the trade back up. I don't want to trade into those periods because it's a lot of noise for me. Now I joined the trade here. Remember why I am leaving the first, I'm avoiding to trade or to enter into the trade from the first candle. I want to be sure that it's actually a good trade for me to join. So I need to be very, very sure. That is why I allow the first candle to complete its own process to close before joining the before going into my market. Now, I come into my market here and I join the ride. That's actually 6 days ride. 6 days ride for 303 pips, 303.5 pips on a 6-day ride. Definitely, on this kind of trend, you need to know how to move your stop loss. So now, where do you move your stop loss? How do you put your stop loss when you see a trade like this? Immediately above the star on currency pair. Let me make that clear. On currency pair, you put your stop loss immediately above the star. Reason being that currency pair is very slow. So no matter how, definitely you're going to be a longer profit. Now imagine you join the trade at this hour period. Imagine you join the trade at this hour-long period, and definitely you're going to move your stop loss. Maybe after some good money comes into your trade, you're going to move your stop loss. You're trailing it down. Boom, it comes back up. A pullback comes in and kicks you out. All you need to do is wait for a better entry. And when is the better entry coming in? Here. Another better entry comes in. You allow the first candle to close. You join the second. You allow the first candle to close. You join the second candle. And right. That's another 80 pips. This it's a lot of movement here. It's a lot of noise trade, and the reason why that happened is because there is no distance. There's no long distance between the star and the candle. Those are the things you need to look out for. Those are the things we need to look out for when we are trading. Now check the spacing between the entry of my candle and the star. It's a lot of space. So it's something that is telling you that it's actually a strong movement for me to go down that the trade is actually going downtrend. So it's very is a strong movement, and it's like we can see on the screen, it's actually a strong movement. Now, let's imagine I didn't join the trade from start. Maybe I picked it here. Oh, sorry. Maybe I joined it here. I joined the trade here. From here to this place, it's also a good trade to enter, but it's very close, and the movement anytime soon something might happen. Definitely from here I've made some few dollars also. Definitely I've made some few dollars. But what happens when after the third or fourth candle the trade pullbacks on me? So that is why we don't trade when the star is actually very moving closer to to the to the candle. That is why we don't trade. I personally won't enter a trade when the star is very close to the candle. And I am sure, um, let me skip that. I am sure of something. I wanted to say something, but I'll skip that. So now we join another trade and we write it down. Now another call comes in. This is another false call. Now this false call, it's above your candle, your two. This movement here. It's it's what it's a news movement, definitely, and definitely something is about to happen again. Something. Hold on. Definitely something is about to happen, and boom! After a few hours, the thing went back. There's a lot of pullbacks that happened, and it took it back up for the trend. Do we understand this downtrend also?
Yes, I do. If anybody has
Okay. Please,
have
let's
a
ask
question, let's
questions
ask.
if you need to ask questions, please, so I will know I am going into the right direction. Please put someone in the chat if I'm going into the right direction. Please encourage the movement. Encourage the movement. Let's go. Let's go. Let's go. Where are my? Are we just here for numbers? Maybe they just logged in and they're out, or they are busy doing some other things. Okay. So now that is all about the SAR and the EMA cross, the golden cross and the death cross for this strategy. As long as the parabolic is concerned, as long as the parabolic is concerned, that is all about the parabolics. Now, let's take this, what we've learned on this SAR and the EMA cross, let's take it back to our mother strategy, which is the Shimoku plus plus public V 0.9. Boom. Sorry, I have to switch trade. I have to switch. My reason is because it's not, we all know why I'm switching. So don't let me bring out a lot from it. This is GBP USD. Now, with the Shimoku, now let's look at with what we understand by our Shimoku and in our last call makes us understand that you don't trade inside the Shimoku cloud. It's either you allow it to go up or you allow it to come down. It has to be above the Shimoku or below the Shimoku. Now, let's check out this hour. This is on the 8th September for itself. Hmm? Sorry, am I on 4 hours? Oh, sorry, parabolic SR. That's what I'm looking for. On the 0 2. Sorry. I think I need to clear this part. So now, on this Ishimoku trend that we have been trying to break down and understand those strategies bit by bit so we can combine everything together. So on my screen, you can see 3 indicator lines. One of my line is the price action. I call it the king. And there's one called my price action. There's one called my lagging line, which it's because the reason why I had to make this call a 1 hour call is because it's a very broad class. This part is another dimension entirely, but I need to just put the parabolic plus sign in case for people who only have this strategy on their screen or who already has it. So here, let's come to our setting. This is the parabolic SR. If you want it on your charts, definitely we come down to plot parabolic SR. Now, on my screen from what, let me remove this, sorry. Let me remove that also. Okay, yeah, done. Let me remove that also. So let me focus on the parabolic itself. Where are you? Okay, this is the parabolic call. Now on the screen, you can see that there's a call that happens on my screen. Here, there's a PB here and there's a PS. Now, this is called a parabolic buy and a parabolic sell. Let me seize this. Now, how do you know that you are really on the long sell? You are really going on the right path of the direction. Now, if we look at what happened here, a cross happened. A cross. This is I call this my price, and this gen, I call it. It's called Kujin. You know, this is I think it's like the Indians or the Chinese strategy. So I think. Sorry if I'm messing up the name. So let me call it the orange line. It acts as a support and a resistance. It acts like what we already have in our EMA crossing, the golden cross and the dead cross. Now check out what happened here. The cross comes in here. You wait for it because it's definitely a downtrend. You allow it to cross over the Ishimoku to be very sure that the future, let's say we don't know what happened here, or let's say we can't determine, we are not able to determine what happened here. Now, you allow, when the cross happens, when your price comes below the orange line, you allow it to, maybe if it's definite, sometimes, let me continue here. If your price crosses below the orange line, you have a call here. Like I have said, there's no cross. There's no guarantee that this trade is actually moving on the right path for me. So now, can you see from here, there's a lot of noise movement. There's a lot of noise, and I don't want to trade noise. And the reason why this noise happens is because the call is real. The movement is about to happen, but it's above the Ishimoku cloud, which is telling us that, and in the Ishimoku rule, you don't trade for a sell above the Ishimoku. You don't trade in the Ishimoku, and you don't trade for a sell above it. You only trade below the Ishimoku cloud for a sell, and you trade for a buy above the Ishimoku cloud. Now, see what happens. Boom. You enter into the trade from here. and you keep your ride. How can I do this? Oh God. Ah, okay, yeah. So from here, you enter into the trade and you put your stop loss here. Where is this knock? Okay. Your stop loss in the Shimoku cloud. The reason why you're putting your stop loss in the Shimoku cloud is whenever the trade is going back into the Shimoku, that means it's pulling back for you. The trade is actually pulling back. So definitely, no matter how you want to trade, even if it's going to be a long trade, when the trade is moving into profit, you definitely want to move your stop loss to secure your entry or secure your account on anything. So now imagine we enter into, oh shit. Imagine we enter into the trade from here before the call comes in. Imagine we enter into the trade from here before the call comes in. That is about, in 2 days, we just made about 253 pips. Do we understand that part?
Yep, that's money.
Yeah. So now you see, if you move your stop loss, this is where your stop loss is, and you're moving into profit, you continue to ride, boom, this is a pullback on you. Definitely, if you are this kind of person like me that I need to wait for another better entry, I wait for another call, because whatever calls that happens for a sell, whatever PS that happens below the Shimoku cloud is actually the call we are waiting for. Now, note that the price, which is my purple line, needs to be below my orange line. That is when you will know that it's still, you can see the moment is getting, the moment this cross, that is to tell you that it's actually a sell. That is actually telling you that it's actually a sell. And when we enter into the trade, it's actually telling us this PB here, it's a pullback, like the way I have explained my EMA crossing, this parabolic SAR, on the plane movement. This is not a plane. Now I have to bring it out so that to explain it to you on a plane way of to understand the movement on this Ishimoku here. So this PB here is a pullback because it's under the Ishimoku cloud. And when this happens, just wait for another better entry, which happens here. Boom. That is another 127 pips in just 3 days. I think it's even more. I didn't do it well. Respect yourself now, please. Okay, let me just put it there. But that is about 127 pips or 130 pips in 3 days. So now, that means you've made double money. If you are this kind of person that do swing trading, from our first entry here, you've made a lot of money. Maybe, on our first entry here, you made a lot of money.